On today's show, how advisors can expand their practice using life insurance settlement market. Part 4 of this week's series on Life Insurance Settlement Update for 2014 with President and CEO of the Life Insurance Settlement Association, Darwin Bayston. Hi everyone, I'm Steve Savant, syndicated financial columnist and contributing author to Backroom Technician and Inspire. Let's get down to business. Welcome to the show, Darwin.
Thank you.
Well, we talked about a lot of things yesterday on regulation. I want to just continue a little bit of that and then get into the things we want to talk about. I thought I heard you talk about off camera, we were talking about a California suit now that's out there on a major carrier, won't mention any names, that really is, the suit really revolves around the advisor not being able to offer the settlement as an option. And that's caused, is that what I'm hearing? Is that what I understood?
Well, that's absolutely correct. And just to review just a little bit about how those regulations came about, there are 6 states that have consumer disclosure acts that require carriers to notify seniors who are going to lapse a policy of the options they have available to them. Mm-hmm. And there are a number of those options. You can continue to pay the premium, you can get a loan, you can do any number of things. But one of them is a life settlement. And in this case, the owner of the policy, I believe it was a trust, they failed, the policy was a large one. They couldn't afford the premiums anymore. So they were looking for ways to reduce that cost. And I believe the only information that was given them were a couple of options, one of which was to reduce the death benefit amount and lower the premium, but they were not given the option to actually sell the policy. So the disclosure to consumers about all the options they have available is something that really is a very, very big deal, and it's something that we take seriously as well. Not just about the life settlement option, but all of the other options, I think, that are available to the owner of that policy that doesn't need it, want it, or can afford it anymore is really important.
When we get to that point in the client's, the consumer's mind where he really doesn't need it, doesn't want it, can't afford it, whatever, this has to be a legitimate option and an alternative. And not to say it could be a fiduciary faux pas on an advisor's point, from an advisor's point of view. I want to talk about, we always talk about how meaningful code of ethics is. I feel like a little Boy Scout putting my hand on the handbook, but we're really talking about best practices, how you would treat your own parents if this was the people you were talking about. One of the things I want to talk to you about today, though, because I really want to notify beneficiaries of these policies, hey, your parents are thinking about doing this, just so that everybody has a family conversation, because they're the people that this was originally written for. Ultimately, for trust work, many times it's the next generation. And I think this is one of those best practices that we need to insert and need to notify these people.
Well, in fact, the regulations require that when a person is going to sell their policy, that their beneficiaries have actually signed off. In the closing documents, there are several things that you have to go through, because keep in mind, you're trying to make sure, the investor wants to make absolutely sure that when that death occurs, they're going to get paid that death benefit. So these are some of the requirements. But one of the things that's already built into the regulations and the law is the requirement that beneficiaries must sign off as well, so that they come down the road, they don't sue them because, oh, I didn't know, and Dad didn't know what he was talking about. So that aspect is built into it.
Darwin, I want to talk to you about the Harvard Business School case. This is kind of intriguing, but let's bring our advisors up to speed on this, because this, to me, is a really cool piece of information.
Well, that was one of the very rewarding days of my life when we had put a conference on in the spring. We do an annual investor conference. And we'd done that conference, and I got a telephone call about a month after that from Professor Lauren Cohn at the Harvard Business School. And he started asking me a bit about life settlements, and he wanted to know more about them because he thought it was something very intriguing. And some of his students in class had brought the term up before. So I asked him what he was doing in the next week, and he said, well, I'm here. And I said, well, fine, I'll be up. And I went and sat down with him for a number of hours, and we talked about this marketplace. And he got online and had access to all of our members and all the information that we had available to him. Next thing you know, he calls up and said, I've got a draft of a case that I've written on this, and I would like your views on it. So I gave him some of the corrected things that needed to be corrected. Next thing you know, he published the case. The case is taught in his Harvard Business School MBA program. And about a month ago, I attended an investment management workshop, which is a premier workshop in the investment profession. And that case was presented to about 100 executives that were consultants and pension fund managers and hedge fund managers and the like. So, you know, to me, what this does is it brings a legitimacy of the life settlement as an investment opportunity to a new era when you're beginning to talk about that and debate it in a Harvard Business School environment or any other environment in academia.
Well, I love third-party endorsements like Harvard School of Business, and it's now taught in an MBA class. There's nothing wrong with that. We come back from the break, we're going to talk more about just how to enter this market, how it can really expand your practice and build out your business right after the break. It's not how much money you make for your clients, it's how much money they get to keep, especially in retirement. But retirement income could cause Social Security benefits to be taxed. One tax advantage alternative is life insurance designed as a non-modified endowment contract that can generate tax-free income without taxing Social Security benefits. These contracts offer differing funding options depending upon your client's risk tolerance. For more information on how life insurance can be part of your retirement planning, just email me at steve@downtobusiness.tv. Brought to you by Ash Brokerage, the practice enhancement company. Well, welcome back to our second segment. Of course, we're with Darwin Bayston, the president and CEO of the Life Insurance Settlement Association, LISA, better known, the acronym. Before we get into this, I just want to bring up this study from Allianz. A lot of our advisors know Allianz from their annuities. They're a huge, big player in annuities. And of course, you know, they're highly ranked now on life insurance indexing for income scenarios. They had this study done in 2010 by Allianz that said 54% of the survey that they did on seniors said their greatest fear was running out of money before retirement. Now, that's been a mantra we've been talking about for a long time. Right. But nobody puts that in the same sentences. And one of the solutions to that could be a life settlement.
That's exactly right. That's exactly. In fact, they said those 54% of those people said they feared running out of money more than they feared death.
Yeah.
That's really significant. That's very significant, which shows you, I think, our obligation and our responsibility to try to at least let them know that there may be a safety net of finances here available for them.
Well, now the states, I've noticed now, we were talking about this, the states have really kind of come on board here. You have how many participating now? 43
states have passed some form of life settlement legislation and have regulations in place.
And so, which has been good for us.
Exactly. And in fact, to show you how far the market has come, 32 of those states have passed that regulation, that legislation, and put regulation in place since 2008. In addition, there have been 2 states recently in the last year that have adopted what's called the Medicaid Life Settlement Act. In other words, someone can, you know, how you have to pay down your, spend down your assets. Well, they have a life insurance policy. And so they're allowing that life insurance policy to be used as to pay a portion of those Medicaid costs instead of having to lapse a policy to get their net worth down.
Which, by the way, I think is huge, because now when the government's signing off on that in regards to the requirements for Medicaid, Medicare, I mean, that's an issue. Well, let's talk a little bit about, you know, I'm looking at, there's a huge gap in the consumer, hardly anybody knows about life settlements. I'm going to say our advisors, we all know about, if you've been in the business at least 10 years or more, you remember there was some heyday during this time. Many of our registered reps who work in the broker-dealer community really have not been, they're really still kind of a misunderstanding. So there's a huge educational learning curve to go here. But I want to talk a little bit about how do I talk to a consumer and how do I approach this? I like life settlements because it's a great backstop. It's a cash reserve that we may not even know we have.
That's correct.
And I want to start listing this on our net worth statements. I want to be able to bid my contract out just to see what the net worth number is beyond my cash value. So if I have a cash value policy, and I want to say, I bid this out, I sent it out, just kind of feel the market out. Oh, I'm always going to get more than I have in my surrender cash value. Otherwise, I wouldn't do it. Right. So I'm going to look at that number, and I'm going to start putting that number, that is liquid money. I could sell that today. I have a bid in my hand, and now I'm going to put that, now I'm just going to start listing that on my net worth statement.
Well, I think, you know, all people who do some advisory type of work for consumers are now sort of moving to a more what we call a holistic approach in looking at the overall financial well-being of the consumer. And so that is the opportunity to be able to put that, you know, consider, wait a minute, what about this life insurance policy and its potential value and to include that. Now, I will say that I believe a lot of the advisory community probably have a lot of skepticism from the past about what a life settlement is. You know, look, they're inundated. I can't even imagine how much a life insurance agent has to know about all the products they have, about all the regulations that they have to follow and everything else. And when you put another thing in the works here for them to think about, it's like, oh my gosh, I don't know whether I can handle that. And so therefore, it is a big burden to overcome their feeling of trust. And I think it is a responsibility of ours then to be able to work with them so they can understand who to go to for the kind of advice they need as a backstop to help their clients.
One of the proof texts to life settlements, especially for the senior market, you know, that ad, what's the actor that does the reverse mortgage?
Oh, Fred Thompson.
Yes, Fred Thompson. That ad has generated what kind of traffic?
Oh, it's in the tens of thousands of inquiries every day
Every
from
day.
consumers.
From
no, I'm sorry, excuse me. Every month.
Every
from
month.
Consumers.
30,000 just because he said there's an option and consumers didn't know about it.
Right.
You see, this is they thought, well, I'm cash poor. And no, maybe your house can generate. So just the thought that many people per month are calling in tells me that the seniors are hurting for money and that they're looking into this as a legitimate play for them. This could be another addition to the reverse mortgage mentality.
Well, that's exactly right. You know, there's another celebrity that plays a role in the life settlement market for one of Lisa's members, the Lifeline Company. It's Betty White.
Oh,
and
yeah.
I think one of the things that Betty White has done is brought a level of trust from a lot of people that this is a legitimate consideration and a legitimate option for them to have. But you are right. There's something about the commonality between a reverse mortgage and a life settlement because they're essentially both providing some additional financial assistance to a consumer.
And they're doing this with two assets that people did not know had liquidity features.
That's
either
correct.
one of them.
That's correct.
Yeah, that to me is huge.
And I think the other thing to realize and just understand is both the life settlement market and the reverse market have had their share of difficulties in terms of being, you know, we'll call it our dark days, but we had our share of difficulties. And now, for them, I think, and for us, it's a new era. It's a new day.
Well, that's all the time we have for today. Remember, before moving forward with any of the ideas on our show, always consult your tax advisor and legal counsel or your broker-dealer compliance officer. Missed an episode? Just go out to our site, downtobusiness.ashbrokerage.com. Want to email me? Just write me, steve@downtobusiness.tv. And remember, you could be wiser as an Ash Brokerage advisor. I'm Steve Savant. We'll see you tomorrow.